Hello,
Hello.
can you hear me?
Yes.
You see my screen?
Yes.
Okay. How are you?
Okay.
A little cold today, huh?
No, it's nice out today. I
57.
thought it was real nice. I just had a light sweater on.
Yeah, I didn't make it out in the afternoon. Maybe it warmed up.
Yeah, it was definitely nice out.
Hmm.
As a matter of fact, I didn't even feel like I needed a sweater. It was so nice.
So a little warmer than yesterday.
Um, yeah, I think it was. I thought the meeting was at 6, so I've been here since 6 o'clock.
Oh,
Yeah.
yeah, I don't know why I put 7 on the thing, but I kind of just set it up thinking that maybe it would work for people, and then I guess more people joined, but now there's like 20 people signed up.
Hmm.
Oh, you got on right away, so I don't know.
No, I didn't have any trouble at all. I didn't know whether to go out or just leave it, so I thought I'll just leave it because I thought if I went out, maybe I'd have trouble getting back in.
Right. Yeah, Zoom isn't the easiest thing to work with. Hello, David. How you doing?
He's
Can you hear me,
connected now.
can you hear me, David?
Yes, I can. How are you?
Great. How are you doing?
Good. Thank you.
Happy New Year to you.
As well as you.
Thank you, my friend. Appreciate that. You're in California?
I'm in Redondo Beach, California, correct?
Oh, Redondo Beach. Nice. No complaints then, right?
It's it's probably about what 48 degrees, but nah, that's not cold.
Oh, wow. Yeah, I didn't know it got that cool.
Oh, 41, about 41 in the morning.
Okay. Yeah, it's a little nippy, but maybe you just don't feel it. Maybe it's not like a true 41. Is that what you're saying?
Um, we have rain coming this weekend. It's not bad. I mean, we're used to 75, 85, 95, but
Right. Hey, hello, Adam. How you doing?
I'm good. How are you?
Good, thank you. Thanks for joining us on a Tuesday.
Yeah.
I know it's
Happy
kind of
to.
late there for you.
Yeah, it's okay. I mean, it aligned pretty well with the way my day went, so
Ah, there you go. Cool.
yeah.
Glad to hear that. Yeah, I
How's
just kind of
things with
put this time down, and I had 20 people signed up, so I hope more people get in here and seem like people were responding and whatnot. You say this is like the most depressing time of year
for stocks?
for just life in general.
Um,
You never heard
what?
that? Like, I think it's January 20th is the actual, like, or is it the 16th? I think
Uh,
it's the 16th because it's like Blue Monday, or maybe it's next Monday then. But I think it's called Blue Monday.
ah,
They actually termed it because of suicides and overall depressing.
wow.
Yeah.
You're getting ready to do your taxes, probably they look at maybe, huh?
Yeah. Well, there's a bunch of, well, Darkest Day,
Yeah.
it's, you get the least amount of daylight and NFL season ends and taxes. Yeah, there's like a few different ones. Weather, it's like cold, typically cold. So And beginning of the year, you know, it's hard when you start over. You know, you just had this rush of all the holidays and celebration with Christmas and gifts and seeing loved ones. And a lot of times they fly in to see you, and then they have to leave. So just exhilaration of it all. You know, you're up and then
Mhm.
down. And then New Year, you get usually hit with new expenditures. You know.
New laws.
Yeah. New laws they get to break. Hello, Danielle. How are you doing?
Hi, I'm doing great. How are you?
Good. Welcome to the group. Good to see you.
Thank you.
Yeah, is there anything in particular you're hoping to get out of tonight's session?
To be honest with you, I don't really know anything about stocks, so just kind of basic what to look for, what's good, what's bad. Anything that you recommend?
Sure. Do you have like a full-time job with 401k?
Yes.
Okay. Yeah, that's how I started my journey is through 401k. So I definitely recommend taking full advantage of that. And I know depending on your work, you know, a lot of time, I don't know, is there HR or do you actually have like an IR department?
An actual IR department?
Yeah, like investment relations.
No, we don't.
Okay, so maybe it's handled through your HR, but yeah, maybe what I would suggest you do is just really take a look at what funds are available because it really does make a difference. A lot of times what will happen, you'll start a job and you have a lot of different tasks and you forget about the 401k and it doesn't mean much to you. But yeah, those percentages can really make a difference in your financial journey.
Yeah, I do contribute to the company 401k and they also do a match. I was just looking for some options outside of that.
Yeah, no, that's good. Yeah, I'd recommend a lot of times you just start you with something, you know, and without you knowing all the options. So there might be more available to you. Because sometimes
Okay.
they set you up at yeah, I was surprised too. Like I just threw it out of my mind too. It really took a coworker to come down and show me his results because he was getting like 40% and he's actually doubling his 401k. And that's why I got interested. And I was like, you mean I can do that? And he's like, yeah, there's a host of funds available for you that you can take advantage of. So then, you know, he showed me like I needed a key and everything. Like it was a 2-week process. I had to get a passcode and, you know, because a lot of times they get incentives to give you a fund that's not very good.
Yep.
Because
Yep.
a lot
Yep.
of people just overlook it. You know what
Yep.
I'm saying? And that's true of a point I'd like to bring up too is financial advice. A lot of people get into that route too of just, you know, having somebody work on finances, but that's not a really good decision either. Some of them are good, but a lot of them are just in it for themselves. They just want to push a stock that they get incentives on.
Mm-hmm.
And that's why the stock market, 401k, they get a bad rep. And that's why I have these sessions to reiterate there's a lot of wealth to be made. And it's not as hard as what, you know, the press makes it out to be. You know, it can be a lot simpler. So we'll dive into some of that. Hello, Ed. How you doing?
And,
Hey guys, good afternoon, good evening.
Good
and
Doing okay,
Brian,
thank you.
and Brian, and additionally, it's nothing like dollar cost averaging into the market with a 401k.
Yeah, that's really how you learn if you're not familiar with
Yep.
dollar cost averaging, what that means. I'll bring this up so everyone can. So I recommend, first of all, to start with an index. I
Definitely.
start with Dow Jones. That's how like I just got started that way. So you want to start with the index because whatever the index does, the stocks within the marketplace, they behave that same way. So as you well know, the most recent crash in history, in recent history, was the pandemic. So can everyone see the screen?
Yes.
Okay. So this is the Dow Jones. The Dow Jones is 37,000. This just mimics it on a smaller scale. So this is 373. That's his dollars. So $373.66. to accumulate 1 share of the Dow Jones. And this is just to show you over the 5-year time frame. This is the high and lows over that time frame. And you can see this big mountain going down here, this valley, if you would. 316, the thing crashed that amount. This is the time when everyone's fearful, everyone's trying to buy paper goods at that time, if you remember. This is the time to buy in the market.
Yep.
Right here. And it's usually when everyone is fearful and saying stay away from the market. You really want to do the opposite, because this is where the value is. This is where I bought Apple at $88. So if we bring in everyone's kind of familiar with Apple, right?
Mm-hmm.
Big phone company, your phones, iPads. So if we go back 5 years, same thing with the Dow. There's this crash here. 323. Wow, $57. Yeah, so now Apple was flirting with $200 a couple weeks ago. Now, back then you could pick this thing up like around $60. That's the time. So that's why I wanted to point out. So when David said dollar cost averaging, that's what he's talking about. Like if you buy Apple now, which is okay, you just don't want to load up right now. But when it crashes, when it has its low of the year, that's when you want to buy the stocks. Does that make sense?
Yeah.
Everyone on the same page?
Yep.
Okay, because that's one of the major concepts. Because why do you enter the market in the first place? A lot of times you get a Google blip about something or a news story, something you see on TV, or a friend says, hey, let's buy in this stock or what have you. And most people, they rush in and they buy a stock and then it crashes, they lose maybe 20-30%, and then you sell out and then you don't do stocks again because you had this negative feedback from it, right? Does that kind of make sense?
Mm-hmm.
So what I would recommend you doing to start is setting up like a Google sheet. Like this is free, by the way. You just on Google, you can set up a sheet. And like I was saying, about 401k, you can use a sheet for that too, and bring up your funds, and you can put them on a ticker. And this generates automatically throughout the day. So this is the stock price on column E. And tomorrow, all these prices will change with the market. So the Dow Jones, like we were just looking at, this price will change. And these companies, I put these on my hot sheet. So these are companies I'm actively researching and looking into for a possible investment. Okay, does that make sense?
Yes.
Everyone follow me so far?
Yes.
Okay.
Yeah.
So I'm just Google Sheets. What it is, so this is a formula. So if you put equals Google Finance, and then parentheses, and then the ticker symbol, that'll automatically populate for the market price. And then by setting goals, whatever goals your goals are, I set up 20%. I think that's above average, I always look at the index returns 8% a year. And for the Dow Jones, every year there's a variance. Like we looked at the ups and downs. Usually there's a variance of 25% on average. Okay. So basically I put 8% is what realistically you can expect year in and year out. Now, if you buy during the lows, then you will get above average return. Does that make sense?
Yep.
Okay. So that's it. I follow the market like that in a hot sheet. And then I try to get a target price, and the target price I set is, I'll go to I'll go to Yahoo Finance. And then so whenever somebody tells you about a stock or a fund in your 401k, look at like over 5 years, or you can even select all. And then look at the highs and lows over maybe the last 3 years and just mark those down. So like on 22, you could have bought Apple for 129. And then like last year, for instance, there was a little valley here, 168. You always want to buy on the lows. And then other than that, did anybody have any like specific questions or like any in regards to any stock or anything like that?
Nope.
Or like goals for this year, since everyone's kind of New Year's resolutions and whatnot.
I try to match or exceed the S&P 500.
Okay. And what do you note that being like? What kind of averages?
Once again, I invest strictly in ETFs.
Right. Well, I mean, what
And-
percentage are you trying to hit, or what?
No, I mean, I buy on the dips.
Right.
I always buy everything on the dips. I bought today. We had some huge dips today in two sectors. The energy sector was down, and also the material sector was down.
But over a long term, what is the annual return that you expect?
I 15 plus. The S&P 500 was about 18 or 19 last year. I was about 22.
Okay. Very good.
Yep.
Yeah, and this is what I do. So like I track stocks and off Finviz, which is a screener. So if you're not familiar with the screener, so this is kind of cool because like on finviz.com, this is free again, but you can go to technical and 52, you can use a 52 low. So you can go like 30% or more below the high price. So then you can get a discount from the high price. So like I was showing you the graph, like the lows. So this will actually pick the stocks that show you a 30% or more below the high price. And then in descriptive, I usually go over $20. That eliminates all your pink sheet companies and things like that. And then if you like a dividend, then you can mark that too. So if you want your dividend to be, let's say, over 2%, you can mark that down. Does that make sense?
Mhm.
Okay. So your dividends, these are dividend companies, and their price is over $20, and you get a discount of 30% or greater on all these companies here. And you can sort this by industry or sector. Like banks, I just stay away from banks altogether. I just don't know like where the whole industry is headed. You know, you have a lot of crypto, and crypto becomes like more popular as these years go on. So, and anytime you're in a bank, there's no one there, right? Like, so I don't know. The banking industry in itself is probably it's in the works of being redesigned, right? Like, and who knows how that's going to work out. So I just stay away from banks like altogether. But then I'll select a company, and then I'll look more into like the fundamentals and the finances to see if that's a stock that I'm interested in for future investment. Does somebody have a question?
Do you have a time frame that you wait when when an ETF debuts, I know you mentioned in a previous episode that when a stock has an IPO, there's a time frame that you wait before taking a serious interest in it. Is that the same time frame for an ETF, or do you have like a different way of assessing them?
Yeah, ETFs, I would give at least 5 years before they come out. And are you're talking specifically about the cryptocurrency that just got released, or
Yes.
okay.
Mhm.
That one might, I don't know how many will follow suit with that too, because I'm assuming that it's a regulation that just got passed. So I'm sure there'll be other ones, right?
Mhm.
Yes.
What is that symbol, by the way? Do you know, like what?
Honestly, don't.
Yeah, because I heard about it and whatnot. I'm not really into ETFs, and I'm not into like cryptocurrency as well.
Right.
Like I still don't totally understand. Like, there's a lot of things about it. Things that make sense, and then things I'm like, I don't quite get it. So is
Me
there
too.
that, Adam, that you noted about cryptocurrency that piques your interest?
Well, I don't pay too much attention to it myself, um, but I thought that an ETF might give kind of like in a way, a margin of safety against a lot of the risk, especially if you buy it at a low price.
Yeah, I guess if it's something you don't know about, my suggestion is probably just to stay away,
Hmm.
until you're familiar with what exactly you're investing in. And that's the thing with me too, because back in the day, like I cryptocurrency, like back in 2012, I was all over it. I watched the Social Me movie, and then, that was a Facebook movie. And then they talk about those brothers, and they're, in my understanding, they're the ones that brought Bitcoin. And, they wanted a hedge against like the bank meltdown that we had in 2008. So that's the reason why that was omitted. And so I was all over it. I went to the bank with $500. I was going to buy it because back then, supposedly, they're only like pennies on a dollar. So I was
Mhm.
just going to pick up $500 worth. And then he looked at me like, bit what? Didn't understand what I was talking about at all. Like, so then the more I researched it, the more I understood you couldn't buy, you had to mine it. And you needed high density graph cards and different computers just to get them running. And so I got discouraged. After all that, I really got discouraged about it. So then I just kind of not pursued it. And sometimes, you hear these stories too, like people have them, but like hackers, because they're not really owned to you, they can go in and take them. And then if you die, you can't pass them off to your relatives. So that, I hear different things, and when I research it, it seems like there's some thing that holds true with that. Does that make sense?
Yes.
Yeah. So that's why I always kind of been discouraged by that. But yeah, anyway, yeah. So what I do is I go into stocks, and then I look at how it outpaces the market. But I usually start in Fizz, and then that's how I find out about new stocks. Because I'm like anybody else, like these companies come out, and I only can track so many companies. But I know that technology continues to impact human lives, and a new breakthrough is always going to come out, right? So I like to be first to know about it. I'm big on 3D printers and different modes of like, finding out about cancer, things
Mhm.
like that. I mean, technology continues to advance rapidly. I would love to know where we are, with AI. You have driverless cars. You see that more and more. And So that's anytime, you know, there's an impact on human lives or things changing, it's good to take note of it. And that's why I always recommend to have a log. If you don't take anything else out of today's session, I would just recommend, you know, setting up a log and something. So when, you know, a stock comes up or you're researching like funds at work through your 401k, you can just plug them in and just kind of just see what the market does, see how it behaves and have goals, you know, like it's just so important to, you know, actually have what you want, you know, like it's amazing like how much success you can have when there's actually a goal in place. Does that make sense?
Yes.
Otherwise, does everyone like understand dividends and how that works? Or is there any like area that
Hey, Brian, I do have a quick question on
Sure.
you touch bases on health and cancer. What do you think of gene modification companies like Verb? I think that's one of them.
Yeah, there's a bunch of them. Editus,
Yes, yes.
big one, and then I forgot
Mhm.
the other. There's a bunch of them. Yeah, yeah, of course, they're on my list. It's interesting because you don't know like how advanced that can get, and it makes sense. I mean, like skin cell reproduction, that type of thing, to find like because humans as we get older we decay, right? I mean we're more prone to injury, more suspect is to illnesses and things like that. So if we can prevent things, and of course aging, you know, that happens with everyone. You know, we always like to look younger. So if there's like this company that they have on the list, it's InMode, and they do skin stuff for skin to help aging. Yeah, InMode. And that's a company I just recently contacted. They're in Israel. They're an Israel company. So I put them on my sheet and just to keep note of it because they're global and whatnot. So, you know, I'm just following up on it. But like, yeah, Editus and things like that, it's fascinating to me, you know, and I think there will be breakthroughs where you probably might be able just to swallow a pill and on your phone, you know, you'll have an app and you can just take a look at your health, your blood work and everything just on a readout, you know, and I know that time's coming. And I know I'll probably see it in my lifetime. Now, exactly when, that's the question, you know. But I like to be on the forefront of all, you know, breakthroughs like that. Because if you're first, you know, that the wealth is just incredible. You know, it's just timing. It's like McDonald's in 1980 or Apple in 1986 or what have you. But there's always, you know, a lot of opportunities out there. Yeah, Chipotle, 2006, Monster. Did you have any specific questions about the?
Yes, I guess one of the companies I was tracking seems that they came up with the cholesterol kind of fighting gene,
Okay.
but it seems like the investors were not happy with the fact that it was a single time treatment. And yes, it would cure the patients, it would help them lower the cholesterol, but it would be a one time shot. So the investors kind of pulled away when I thought it was a great for humanity kind, but not for investors, which I was a little disappointed to see that it got shut down for it.
What was the symbol on that one?
I will have to get back to you on that. I
Or
thought
the
it was
company?
the
What was the company?
yes, yes, I cannot remember right now. This happened maybe 3 weeks ago.
Okay.
Yes, I'm gonna have to maybe look it up on my records and maybe I'll send it to you on a chat.
Yeah, if you could, yeah, direct message me and I'll do the background on it. Because like this might be foreign to you guys, like all these columns and things like that. But you know, I start with the symbol, and the company name. Then I have a phone number because I actually call the companies. And I'm on YouTube, like, and some of my conference calls, I'll actually video. I'll do a vlog about them so you can see like the type of questions I ask and things like that. Because I get a lot further when I don't talk to the investment department, if that makes sense. Like I get a lot further when I just talk to an average Joe that picks up the phone. Because I can find out more about what I'm after than the investment department. And the reason why is because they, by law, they can't disclose a lot of the things that I want to know. Does that make sense? It's a lot of information that I'm trying to get through them. They won't have it, or they're not able to give it. Well, yeah, so I'll just go through here and I'll mark my goal, and that's in regards to the market and the date that I started tracking it. And I put the price on that day. And then I just mark like what the current percentage is from the market. So I can see like this IIPR, you know, I put on my chart 1113, and it's 25% from where it was, and the yield. And the quick evaluation, I just do that on Yahoo. And this is an enterprise value divided by the outstanding shares. And that gives me the quick evaluation number. And I find that this holds a lot of weight when I'm tracking stocks, because I have an Elite 100. And when I just ran this the other day, and on average, there was an 8% variance between the quick eval and the market price. So there's a lot of weight that I give it, because I notice if this number is lower than the market, the stock does tend to go down. I noticed that with Medifast, their company I've been tracking for a couple of years. This company was, I think, over like $300 at one time. And it's a $55 company, so it's my interest to see if the bottom is here, right? So, I mean, I know the rebound is great because they have the cash on hand and the earnings keep going up, but yet the enterprise value drops. So like every time, like month after month, when I run the company, it just seems like this enterprise value goes down and then the stock goes down with it.
I'm sorry, Brian, I kind of missed where do you look up this enterprise price?
Yeah, because this is a good way to do it. Everyone talks about like discounted cash flows and and that's not how Buffett does it anyway. You know, like he has methods way beyond the means in the book. But I mean, this is just a quick way that you can get a quick evaluation. It takes a couple minutes, and this is how I do it. So like Apple, for instance, I go under statistics. And the enterprise value. So the enterprise value is like everything that Apple owns. And the shares outstanding, that's how, you know, they get to this valuation. You know, a lot of times, you know, when a company takes on new endeavors, they issue more shares, which means the current shareholders are diluted. But if they have free cash, they don't have to offer more shares. Does that make sense? So you don't want them to just pour out more shares into the marketplace, because that hurts the current investor. So anyways, yeah, the shares outstanding is here. So there's 15.4 billion. And then you have the enterprise value here.
Excellent.
Yeah,
makes sense. Thank you.
Yeah, it's very helpful. I learned it actually out of a movie, and I followed up with a book too. So there definitely is some truth to these numbers. And do I hold all my weight into it? No, obviously not. You know, I could see right here, like this Polaris. I don't know if you know about Polaris or not. They do a host of different recreation vehicles. They do stuff for water, RV, quads, even like just street vehicles too. Host of different vehicles, but like they have a ceiling of $125 on the quick eval. I'm trying to get, the stock is $88, 20%, I'm trying to get 105 out of it. But the ceiling it's just nice to know that this is here, and then every month, like I can just check to see where we're at, because like in Harley, I just recently picked up Harley Davidson, and I noticed that the enterprise value went up a little bit. But just interesting to see, if a company is issuing more shares, or how the whole framework in the company works. And knowing that as an investor is important. And then other than that, I'll just put like timing and target price, and that has to do like with the chart that we've seen, because obviously when I find out about a company, it might not necessarily be at the best time. So we'll go back like big charts, for instance.
I have
So,
another question.
Yeah. Sure.
When a company is more heavily followed, like say something like Tesla, the earnings, when there's a change in the earnings, like through a quarterly report, is that going to be more quickly reflected in the stock price as
Absolutely.
opposed?
Yeah.
Okay.
So earnings is the lifeblood of a company. As an investor, no matter what company you're investing in, if you're buying long, you want the earnings to do better quarter after quarter, year after year. So I'm on macrotrends.net. There's another free tool. So under finances, balance sheet, income statement rather, finances, income sheet. At the bottom, there's earnings per share. So as you notice, they were in the red a long time, obviously, right? Because the electric car company has never been done before. They were the pioneers. So they started in the red. 2017, they're negative 80 cents. This is yearly, by the way. So negative 80 cents. Then it got better for them, negative 38. Then they even got better yet, negative 33. Then right here, 2020, now they're in the black, 25 cents. And then $1.87. Now they're at 402. So absolutely remarkable. And that's why, Tesla gets that type of response from the market and everything else. Then you want to go to quarterly and just see how that carries through. So you want it incrementally to increase quarter after quarter, year after year. That way, an investor has some predictability in the marketplace. Does that make sense?
Yes.
Great. Did you hear specifically about Tesla, like their fourth quarter, or like?
Well, I was just using them as an example, because it was like them compared to like more a lesser known, lesser followed company. I know sometimes that it'll always match up to the earnings, but sometimes it can take up to years. Whereas like with Tesla, I heard they like missed their earnings call. In
Yeah.
their
So real
most
quick,
recent.
I know a lot of people are new to investing. Sorry to cut you off.
No, it's fine.
Just real quick, I just want to, so what they're talking about is this right here. So let's see, forecast, I think. Okay, so for fourth quarter, Harley Davidson, their earnings date is February 1st. So typically Harley Davidson will come out and they'll say they're looking at 50 cents for their earnings. Okay, so that's what Adam was getting to about like the earnings call. So, but what will happen is something might happen with Harley. Let's use the pandemic at that time. Pandemic happened, they didn't have any way to know about it, but that cut their sales. So then instead of 50 cents, they have to say, well, we're not going to hit the 50 cents. It's going to be 30 cents or what have you. So when they don't hit their earnings, the market a lot of times will overreact to the market. So a lot of times that's like the number one reason why a stock will just suddenly go down in valuation, because the marketplace will overreact from the earnings report. Does that make sense?
Yes.
Yes.
So throughout the year, you'll have 4 quarters, and it's always different. It's how the company sets up their taxes. So like for Harley Davidson, it's February 1st to announce fourth quarter last year, but Tesla is January 24th. So in a couple weeks, they're going to announce what they did for last year, fourth quarter. And that's important because, like I said, the investors are counting on a big earning. They know if they get bigger earnings, the people that hold Tesla stock, the stock is going to go up. So they get excited. But the reverse is also true. If they don't hit their earnings, then people sell out and then the stock dips. So that's why that's a big deal. But when I buy a stock, I want to hold it for a lot of years. I tend to hold it 10, 20 years. So I always ask myself, in 10 years, is this stock going to be relevant? And for Tesla, my answer is yes, because he just started. We know it more on the West Coast because it started here. But, as they branch out, the electric charge banks that they're doing, like in strip malls and things like that, those are illuminated at night. So it's advertising. A lot more people are switching from gas to electric. And there's just more capabilities to make that happen. A lot of government incentives, kickbacks and whatnot. And they're getting better too. They're producing a better car at a lower price point because they're able to mass produce now. So those are all reasons why, like I like Tesla in 2030, 2040, and so on, because they have their brand now. When anybody says electric car, that's what a lot of people think about. It's Tesla, and college kids graduate, they want a new Tesla and things like that. It kind of gets caught up into your everyday language. But yeah, great question. Anything else? I know we went over a lot of different things tonight. Does anybody have a particular question about anything? I don't know if my speaker, hello?
No questions from my side. Thank you.
Oh, okay.
Good
Yeah,
information.
I'm sorry, I was just hearing a little muffling. So I didn't know if somebody's trying to ask something or not. So apologize about that. But yeah, otherwise, I like to do these sessions maybe a couple of times a month, and then, go into specifics, maybe actually, bring up like 401k mutual funds and things like that. Cause that's where I started, if it wasn't for him bringing something up and realizing that there's opportunity and a way to make money, it's important, especially, if your job gives you matches and incentives I know the government, you pay less tax when you have more of a percentage in your 401k. So it's definitely a tax benefit. But not only that, like David was saying, you also learn, and just by paying attention to what your quarterly reports look like. So yeah, I want to congratulate you guys for taking the time. I know there's a million things you can do, YouTube and Netflix and all that. So I mean, really be thankful, be proud of yourselves for taking the time to ask the questions and try to understand a little more. It's definitely a life-changing event. It's definitely gave me a lot of opportunities. I start each day looking forward to what new companies are out there, what new Teslas could pop up, or like Ed was saying, what advances in the medical field, I think we could be 5 years from just a total breakthrough. And if we're on the right company, you know, we could be the future millionaires of that stock or that company. Does that make sense?
Yes.
All right. Otherwise, I'll end it here. And I just wish everyone a great day and thanks for joining.
Yep. Thank you.
Thank you.
Have a
Thank
great
you. Have a good one. Bye.
day.